Up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon. Welcome to the September 3rd, the Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out, I don't know what we'll figure out. We'll figure out something out here. No, we're going to go figure out what the bulls and the bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I'm absolutely grateful for your presence here, but more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in 877-927-6648. If you can't dial in, we've got you covered there too. Let those fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got all the indices in the green. The Dow's down 827, the S&P 130, the Nasdaq 661, the Russell 45. Semis are off 140. Spot volatility index up 22%. If we see that at the end of the day, you can almost guarantee a bounce coming tomorrow. Friday before a holiday out there. Any rate of change greater than 10%, odds favor a bounce or bottom within 48 hours. Usually it's within 24, but 48 is the historical number. You've got gold trading down $10, silver's off 55 cents, light sweet crude is down 7 pennies, and leading the charge, the upside, 5 below is up $8. Kensington Capital 7. To the downside, Amazon 185, Google's off 99, Mercado Libre 86, and Shopify down 69. Let's go to our first caller, which is Jim in Palm Harbor. Jim, thanks for calling. Thanks for holding. How are you today?
I'm good, Steve. How are you?
Very good. Thanks so much for asking. And I think you've got some general market questions or something specific that I can pull the chart for you.
I like pullbacks, but when they're like at 5% or 10%, but I'm just curious about it this time because the markets to me have never not been normal in the last year or so. What I remember is being normal anyway.
Sure. You know, I didn't think they were normal for the last 2 days, but today's actual decline proves for me that they're actually normal. Normal from the technical standpoint. That's really all that I'm looking at out here is, you know, do the technical patterns, are they working, continue to work, things of that sort. And, you know, and there was a bugaboo, so to speak, in the market. I think we briefly touched on it yesterday regarding the spot volatility index. And so today's action isn't a surprise when I see it. You never know. You know, I didn't see a signal this morning that we would see something like this. But anyways, one person's normal is another person's abnormal out there. But what specifically can I answer for you or try to answer?
Well, I'm just curious about the pullback being on this holiday weekend for Friday. You mentioned that you thought there would be a bounce based on the VIX, and so I was just wondering if you know, it just seems shaky to me. And I'm kind of concerned that it might keep going down. Which I'm like you. I think a pullback is a healthy thing, and we've been needing one for a long time. But it's been a while. It's been so long since we had a pretty good pullback that now, instead of used to liking them, I'm nervous about it. So I'm just curious about if you think
we'll certainly
play a
spend the
bounce?
show we'll certainly spend the show time today trying to answer those questions and to identify key levels that each of you can observe out there to help answer that question. So with regard to, I'm still not sure. I want to make sure that I answer a question that you've got. Especially while you're on the horn.
Where do you think major support levels are going back either through Fibonacci levels or your TAS profiles? That's really
Sure.
what I'm after, just especially in the NASDAQ, what I'm looking at.
Great. So, Jim, this chart right here that we've got up on Tiger TV is the one that's going to be the most important to you, in my opinion. So you're interested in NASDAQ, so that makes it easy for us to go take a look at it and break this apart with you. And here in the NQ, if you take a look at the very left-hand panel, that is the daily time frame chart, and that shows you all the daily profiles. And each time that the NQ has pulled back to the bottom of the profile since the March low, and I've got those identified in arrows out there, they have been buying opportunities. And that's really the question I believe that you're posing right now. Is today's pullback a buying opportunity? I don't know the answer to that question. I will know the answer to that question. I may know the answer to that question on Tuesday. But here, let me tell you the reasons why. First, the first answer to that question will be dependent upon where does price close. There's a brand new profile that's attempting to form out here, and the bottom of that box is 11,841. So I'm going to move from this chart and go over to my other quad charts out there. It's a little bit easier to see that profile. But do you see each time price, for example, April 23rd, price pulls back, tests the bottom of the box. That was a buying opportunity. Same thing on May the 4th. Same thing on June 12th and June 15th. That was after a big, gigantic move back on June the 11th out there. The same thing back on July 24th. The same thing out here on August 11th. So I don't know, September 3rd. If September 3rd holds 11,842 at day's end out there, and that's a real possibility, don't know whether it will, then, Jim, it says may be a buying opportunity. If it closes below the bottom of that profile, well, then it's different than what we've seen out here. And we have to go to one other element, and that's called the knee-jerk reaction. What's a knee-jerk reaction? So let me show you this. Give me a moment here to get over to that chart. In bull markets, which we're definitely in, and since you're interested in the NDX or the NQs out here, I'll pull over the NDX 100. You can do this on your charts as well, folks, everybody at home. If you take a look at them and have you focus just coming off of the March lows. Now, what this is showing us is that every 2-day pullback, meaning that the today's close is less than yesterday's close, tomorrow less than today's. That would be my 2-day pullback. They're numbered out here with numbers 1 and 2. That's all that this system here is looking for, two-day pullbacks. And you can see that each of those 2-day pullbacks have been nothing more than buying opportunities or knee-jerk reaction bottoms that have come in. There was one exception. That one exception, Jim, was on this trading session. Oh, I think I lost Jim. Production room, if you can go ahead and hang up on that. There you go. Perfect. So I know that Jim will be listening. And so the one exception so far since that March move higher was August the 11th. That turned out to be a 3-bar knee-jerk reaction out there. And that's typical what you would see in a bull market. We go back to any bull market and you'll see that take place. Take a look at the run up here from October in 2019 to February of 2019. So that's another element we've got to take into consideration. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we were on the line with Jim in Palm Harbor. We lost that call. My apology, Jim, for that. But we know what Jim was asking about, and so I want to go through the explanation, at least provide you with the information, the data, so that you can then determine whether to apply it, whether it's applicable or not. So we were talking about the two or three bar, but typically it's a 2 bar, just a little knee-jerk reaction low. You know, here's the monthly chart, Jim. What I did is I changed this over for you on the NDX 100, and if you take a look at the most recent 2 bar, it's a 2 bar, so it doesn't matter whether it's a daily, it's a 30-minute, and so forth. Time frame out here, the most recent 2 bar knee-jerk reaction low was the one from March out here. But again, you just take a look at the bull market from March of 2009. You'll see this pattern prevalent. Now, and how do you know if it's going to stop at 2 or 3 bars? You don't. It's when you see it, then you see price bounce up from there, and use other technical tools out there that will assist you with regard to what the market is going to do. If we don't get that 2 bar reaction out here, then you end up with those. For example, this is a monthly chart. You come back to the 2007 top out here. You're all the way over on the left-hand side of the screen. You know, we didn't see that same type of response out there. So ideally, when you get those 2 bar knee-jerk reactions, you haven't busted through key levels of support, which takes us back here to our daily profile. So preferably for that pattern to work out is that price will hold the bottom of that daily profile, again, 11,841, specifically for the NASDAQ. Now, we don't have to just stop there. As one of our denters pointed out earlier, the top 7 stocks represent more than 50% of the NDX 100. So let's take a look at the NDX 100. We want to understand, Jim, is there a change in trend that's going on here? Well, if there is a change in trend, a couple different things we'll see. I don't know whether we're going to see it right now or not. We're going to go find out. Market breadth would turn on the daily time frame. So as we take a look at the NDX 100, right now it is still bullish market breadth. Let me show you what I mean out here. So for those folks, this is what I always like. I'm not referring to anybody in the den, okay? It's not a den thing. It's really folks on the boob tube out there. And so in one breath, you'll hear this, right? You will hear people, you guys have the boob tube on. You'll hear folks out there, commentators, whoever it is, and they'll tell you, stuff like, it's only 5 stocks moving the entire market, right? So that means that none of the other stocks are participating in this. What a load of absolute BS that even anybody could even buy into that. No, that's not how the market works. You want to understand the market breadth out there. And so you have to take a look at those other stocks. I don't care if 6 or 8 stocks make up 54% or whatever the number is of the NASDAQ 100. What is the overall market breadth of the stocks? Well, we've got that here for the NASDAQ 100. Presently, at the moment, at 1:21 in the afternoon on September 3rd, 39 instruments are trading above the top of their profile on a daily basis and 14 below the bottom. That is market breadth bullish. So what this says to us right now with the information that we have available to us, Jim, is that the 2-bar program, knee-jerk reaction, it's still in play out there. And I'd say it's really in play primarily because we're not seeing the Dow itself fall apart. In other words, the Dow has not broken through any key level of support out there. And that should really be the weak link out here. It always makes me say, something to think about. Now, with regard to the Dow, and I'll just put those profiles back up there because you absolutely want to be paying attention to these. Inside the Dow, that number is 27,997. So again, you're going to watch 27,997 by the end of the day. It's not in play as we speak right now. 11,842 and 3472 for the ES Mini to look for clues out there. With inside the NASDAQ, just sticking with this out here, we would see those top-weighted instruments begin to break support. Well, where's support and what are the patterns inside of Microsoft as an example? Today's bar inside of Microsoft confirms a Rhodes Momentum Indicator top price was stretched. Now we've got the bearish reversal candle. What has price done? It's going to pull back to levels of support. We just use here basically 4 areas of support. It's really simple. One of those levels is Stevie's green line. That's currently 224. Price is below that. When it gets below that, what's it tell you in the line is green? A further retracement back to another level of support. Where is that? It's the top of the profile, 217.81. Tested and rejected. So far with regard to Microsoft, support has held. Topping pattern? Absolutely. But all topping patterns give you the real authority to do is to get back and test support, much like the NQ or ES is testing the bottom of its profile. Well, we get to more granular by going down and taking a look at each of the equity instruments out here. In the case of Apple, what do we know about it? Well, clearly there's an A to B, several A to B equals CD patterns to the upside. We also know that coming off the low here in July, that it's got wave number 7 out here. You had a key reversal session yesterday. Price is below Stevie's green line. Remember the first level of support, but that line is green. So you still have a rising price oscillator, or you have a price oscillator above zero. It's not rising, it's now falling slightly. But support inside of Apple, price hasn't even made it back there. And that would be 117.77 or 116.20 or 114.62, and then finally or 113.05. Remember, there's basically, did I say 4, 5 levels of support that we use out here. Stevie's green line, the TAS market profiles, which could be the center, top, and bottom, and then the breakout, the TD9 breakout level. Apple hasn't even gotten back to a level of support. Valid topping pattern? Absolutely, but not even back to support. So nothing broken inside the NDX 100 amongst those 2 instruments out there. If we take a look at Amazon, what pattern does it have out here? Not much. Now, price is inside its daily profile, and its key levels right now are 32.59 and 32.81. No change in trend, really, until you get to below 29.96. But use the 32.59, 32.81 out there. No levels of support have been broken. So let's go take a look at Google out here. If we take a look at Google, somewhere around 8.25%. Here you can see an A to B equals C to the upside. That's being confirmed by today's bear sash candle. Price right now trading just slightly below Stevie's green line. That's at 1647. We're at 1640 out there. And it's just underneath the top of that daily profile. Have any key levels of support been broken inside of Google? Heavens to Betsy, whoever Betsy is, no. It's got to get below 1538.20 in order for that to occur out here. I'm not saying that price won't get down there or can't get down there. What I'm doing is sharing with you and taking a look at the markets right now as of 1:25 in the afternoon to try to make a good conclusion, or at least by the end of the show, a good conclusion out here. If we take a look at Facebook, what do we know about it? It's got a TD9 count top. It was bar number 8 that identified that top. Price right now is below Stevie's green line, which is 293. If price close, and we're at 288. If price closes above 293, even though Facebook has a valid top, it hasn't even been able to break the easiest level of support. Now, it is trading below that easiest level as we speak right now, 293. But it's not even made its way back to anywhere near its profile levels, which are 274, 270, 265, and then 259 for the breakout level. Valid tops? Absolutely. I can show you valid tops from here to Kingdom Come, wherever Kingdom Come is. But I could show you that. It's a matter of whether or not price is really able to bust out key levels of support. And so far, not the case. Now, if we take a look at Tesla out here, with regard to Tesla, Tesla is actually below the bottom of a bullish structured profile, which is at 420.60. So Tesla not looking too hot. Maybe getting ready to make a move all the way back to 287. A second close below 420, and that may be its message to you. Steve Rhodes with TFNN. We'll be right back. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, Kemo-sabe, you got to love. Did you guys, gals, listen to The Lone Ranger on the radio? That was a great program, wasn't it? Kemo-sabe. In today's day and age, that'd be considered racist, I suppose. Although I think Kemo-sabe, isn't that really just a made-up name out there? I think just a way of affectionately referring to the Lone Ranger by Tonto. So, with regard to the cavalry, it's just kind of a smooth. So G7 helped me kind of smoothly work into going to Kemo-sabe and Lone Ranger out here. And G7 said, hey, the cavalry is scared to buy today. Lee Corso would say, not so fast. The cavalry doesn't arrive until they tell you it's arrived. How do we know? Well, we know based upon the patterns. What are the patterns? Well, as we take a look at the NQ, sticking with Jim's theme out here, we've got a TD9 count bottom that has formed. It did it as we came on, just came back from that break at 130. We know it's bar number 9 or the bar following 9 that can be the low of that pattern out here. So you've got a valid bottoming signal inside of the NQ. How are we going? And you've got a brand new, and you've got a bullish structured 30-minute profile out here. So that says support should be 11,774. Certainly the low. Now, remember, the bar following bar number 9 can be the bottom of the pattern. So we really won't know until about 2 o'clock whether that's going to take place. But here's the real key. If the cavalry has arrived, so just because we get a bottom pattern out here doesn't mean that's it. Yes, first attempt. And if we take a look at, first attempt between now and 2:30, really, to put it into proper perspective out here. But we've got the signal. And you've got the bullish structured 30-minute profile. So it really should be ongoing right now. Again, we're just using the same technical tools. We've just narrowed this thing down to the 30-minute time frame, which is the long way of me getting back to Jim's question, basically, which I think would have been on a pullback like we're seeing on the daily basis. You got this wide price spread, and there is volume behind the move out there. How do you know whether it's a buying opportunity? And, Jim, that's a great question, and I know you were going to ask that question. And the way that I would line that up is when I see daily coming back to a level of support, such as those daily profiles that are attempting to form out here, I want to see a bottoming pattern on the short-term time frame. And then I want that bottoming pattern to prove itself to us. Prove it how? Well, in this case here, there's just one line that price needs to get above, close above. You tell me what that line is that closes above, that tells you, okay, rally on to 12,271. Now, some people are going to say, what the heck are you talking about, Steve-O? Well, 12,271 is the breakdown level from that TD9 count pattern out here. But that's not the line that we're looking at. It's Stevie's red line, green red line out here, the oscillator and change line. It's currently priced at 11,925. So 11,925, Jay, is the number that I see. See how price has not been able to get above Stevie's red line here since, well, really, quite frankly, it's pretty much been that way for the most part since about 9 o'clock last night. But if you take a look at, you see, and it changed colors. It went from green to red out here. We haven't seen that test yet, so that's upcoming. But over many bars out here. But see how prices stayed below that. So there's your momentum. So if we see price close above Stevie's green line, red line at this stage here on the 30-minute time frame chart, chances are that it's going to go ahead and make a run back for where it had broken down at the 12,271 level out here. So is it a bottom? Yeah. Is it a valid bottom? Yeah. Does it mean it's a bottom that's going to move up to 12,271? No, I can't say that. If price closed above Stevie's red line, then yeah, then it's absolute game on. That would be the meaning. That's all we have to do to take apart a chart to be able to have it communicate to us what it's attempting to do out there. So yes, the cavalry has arrived. The problem with this inside the NQ is that it would prefer to have the cavalry arrive for all 4 equity futures contracts. Unfortunately, the NQ is going to have to do a lot of heavy lifting. Why? Well, if you take a look at the Russell 2000 as an example, let's pull this over here right now. Take a look for any bottoming signals here on the 30-minute time frame. Do we have anything? But we do not. We don't have any TD9 counts. We don't have anything out here on a 30-minute time frame for the Russell 2000. So it's not going to help the NQ out there. If we take a look at the Dow Equity Futures contract, well, the Dow has a little bit of time, a couple more half-hour segments before it might form or could form a TD9 count. Now, no valid TD9 count out here. This is where it gets a little dicey, so to speak. We'd like to see all of them, or at least 3 of the 4, generate those nice bottoming signals. So in order for the Dow to even get a valid TD9 count pattern, it has to take out the low in that 1 to 130 time frame out there. Bars 8 and 9 are the bar following 9. So you don't have the Dow at this point in time saying, hey, I'm ready to chip in and help you lift this boat up the hill out there. The ES Mini looks very similar to the NQ. It's 1 bar behind, so it had just formed bar number 8, whereas the NQ had formed bar number 9 out here. But this bar could be bar number 9 to generate that signal. Inside the ES Mini, you're looking at 34.94 right now as a key level. So it's going to really be all about the ES Mini and the NQ, and quite frankly, as it should, because those are the two that are forming new profiles today. And if price can, and so they're out there, the ones fighting to try to hold the line. Speaking of holding the lines, let's go out to John in Philly, who's been holding. John, thanks for holding. How are you today?
Hold the phone there, Steve. Hold the phone.
Hold the phone. All right, natural gas. Natural gas.
Sir,
tell us what you're doing.
I spoke to you on your show Friday last. That was a day in which the October and the January contracts upon which I was focused were making new rally highs. And I asked the question, did your work show any setups or clues of topping? One of your tools did precisely that, and on the October natural gas contract, that very day, Friday, topped it for him, and we've been down since. My question in calling today is to ask this: is there any of your TAS data or your oscillator unchanged data that would suggest this pullback down to this 242 that occurred yesterday likely holds, or does this look to you like this is the early stages of an emerging and more lengthy downtrend?
So yesterday's low should hold. The reason that it should hold, it's the very left-hand bottom panel of our screen, folks, that we're looking at. That is the October contract for natural gas. And what you should notice, or what I'll certainly point out to you, is that is a bullish structured daily profile. So yesterday's low, as John pointed out, got down to 2.415. The bottom of that bullish structured profile, 2.413. So that is held out there. So when I say it should hold, it's because there's really more support in that level. If there were a close below that 241 level, John, then that would say a change in trend or really a signal of a price move back to 231. And 231 was the TD9 count. The TD9 count identified a top inside natural gas in October, as did wave number 7, that was letter G out there. So it's not unusual to see what we're seeing, but has support been broken inside of natural gas? The answer is no. That support is where yesterday's low was, or just a couple of pennies above that, 241. Hey, we're about to go to a break, John. Do you want to hold in case there's some other questions or other data I can provide to you?
I would, with just one quick follow-up. Thank you.
Perfect, you bet. So we'll be back with John in Philly. We'll take a look at natural gas or anything else that he's got an inkling to look at. This is Steve Rhodes with TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We're on the line with John and Philly. We're taking a look at natural gas. And before we go back to John, I just want to point out one thing. So one of the things in that last break John and I were looking at was yesterday's pullback. We saw that right into a bullish structured daily profile. And this comes really back to Jim's question. Is prices moving back into a support level out here? Or now he didn't know it was support, or John didn't know it was support. But we now know, and taking a look at the charts and using our task market profile, and what I had shared with you was that, hey, when price is pulling back to a level of support on a daily basis, you want to be able to find some type of bottoming signal on a short-term time frame. Well, if you take a look at what natural gas was doing yesterday at 9 o'clock in the morning, as it was pulling back to that 241 level, or what was it, 241, yeah, around 241, price was forming a Rhodes momentum indicator bottom. You had that hammer candle, price went ahead and bounced from there. When natural gas topped this morning at 10 o'clock, it was a TD9 count pattern, and right now price is dealing with a support level of 247. On that last bar, price did close below the bottom of that, but remember, we've got a 2-bar requirement, not just a one-hit wonder out there. So I just wanted to point that out to you folks as far as how to try to time or make a determination whether there's really strong support worth trying to take a trade there. So, John, back to you with regard to natural gas. Sorry about that little side track there, but I thought it was important to be able to have just talked about that and then to show something live and how it actually had worked, yesterday. So what additional information?
Yes, that added info you just presented is very helpful, so thank you on that shorter term. Just to complement all of that, I will just share with you and your listeners, I've discovered over the years just very simple tools and the power of that, and that is merely price coming into prior swing points.
Yeah.
Yesterday, in fact, I did a buy scalp intraday, the second, on that October contract.
Yeah.
Right as it came down and tested it was the 242 low that was struck August 21st. And, of course, I didn't know it was going to hold that level, but it was a low-risk buy to quickly get out and take a small loss if it did not bottom and reverse up. Interestingly enough, it bottomed and reversed right up for a nice intraday move. So swing
and folks,
points,
John could have also
very
John could have
simply,
also
can be
used
very
the high.
powerful.
Yeah, and John, you could have also used that high from August 6th. So a prior swing point that price had gotten above and came back and retested and rejected it. So you had a number of nice things going for you in that 241, 242 type level. Now, that's all well and good. Here's the larger issue. And I'm going to ask the question, but and you may not have asked a question, but I couldn't let you get off the air without at least pointing this out to you. And this is the weekly time frame chart. And last week was really nice price action inside of the natural gas contract, as it had taken out real key levels of resistance. The first one was at 258. It was a prior swing, as John was referring to prior swings in a bearish engulfing, and then at 263, which was a TD9 count. And so at the beginning of this week, and even maybe through early Monday, Tuesday, it looked like this was getting ready to continue to move higher. Well, yesterday and today's price action, John, has turned my weekly oscillator and change line from red to green. And when that changes colors, I wish I knew how many days. I don't. But it does tell us that price and that line are going to catch up to each other. Now, it could be just sideways movement in price, and the oscillator and change line moves higher. It could be price pulling back. It could be, any of those combinations. But the point was, it really does appear, because price has been able to hold these key resistance levels out here, that the real signal that price will be back in that 223 range or lower will be watching the bottom of that daily profile at 241. I would say if you see a close below that, then odds favor that price is headed back to the weekly oscillator and change line. Okay?
Yeah, thanks so much on that. The reason I was calling and asking you Friday and then today about this commodity is, frankly, I do not understand fundamentally why this market should continue to rally higher. But I've come to learn over the years, from time to time, markets start doing things where I just don't have good market intelligence explaining why. And in those cases, I've had enough experience where I've come to learn that price action itself can be a clue of something that the crowd just doesn't comprehend, and I better pay attention. So
good point.
Hence,
good point.
Hence, that's what I'm doing now. Thanks so much on that. In parting, I'm going to ask if before the end of your show, if you can describe the TD9 count rules that you've employed here just on that on the NASDAQ futures, the 30-minute charts, where you were just describing 20 minutes ago where you saw a TD9 count on that time frame forming. And I don't understand how you count from the top, say, last night or, Wednesday at 3, 4 o'clock, where you come up with another 9 count. If you could do that, I'd appreciate it. I'll hang up and listen. Thanks so much.
Absolutely. So that you bet. And thanks for the question. That's pretty easy, folks. The way that the pattern is working, it's taking a look at each bar and comparing it to the bar 4 bars earlier. And in this case here, we're taking a look at moves to the downside. And as long as the close of that current bar is less than the close of the bar 4 bars earlier, that's going to be a count bar. So if you're at count bar 1, then it's the next bar. Then you're going to get to number 2. Well, and once we get to number 9, that's it. The pattern stops right there. That's where I stop it, and it recycles. So that next, so in this case here, John, and taking a look at it, bar number 1 actually formed at 5 o'clock this morning. Then we had another one at 5:30. Then another bar at 6, and then another bar at 6:30, and so forth, until we got down here to 9 o'clock this morning. And as I wrote in the newsletter to folks out here, and this is the beauty of the beauty of this pattern. It's subtle, but it's subtle that is just beautiful. I mean, we're gorgeous. And yeah, I the only difference between Trump and I is I've got 20 words in my vocabulary versus his 10. But it's beautiful. In any event, here, let's just stay focused here, Steve-O. The beauty about this pattern, John, is that we know that the higher low, in this case here, we're going to talk about lows, okay, that the lows must occur on either bar 8, 9, or the bar following 9. So that is labeled right here now. Bar following 9 on my system is labeled as 1 in this case here because that close was below the close 4 bars earlier. So the real beauty of that is that if you don't get a sideways move, a hiccup, or a bounce, and that next bar you get a close below it, It tells you about a strong momentum move to the downside. And that's exactly how this played out this morning. That could occur again, right? Inside the NQ, we know we have bar number 9 that took place at 1:30. We know that the bar following number 9 is going to occur here at 2 o'clock. I don't know which of those two will have the low. Either one of them, whichever is the low, if there's a close below the low of this pattern out here, then the same thing can unfold. It tells you about continued strong momentum. Even a counter trend rally could take us up to 11,920. That'd be a nice rally. You're at 11,769. Its price must get above Stevie's red line to tell you that there's more to come. In this case here, the more to come would be 11,982. That's still the top of that 30-minute profile. So I hope that helps you out, John, with regard to the TD 9-count pattern out there. Folks, go subscribe to Mastering Probability. There's an entire workshop out there, an hour dedicated to explain the pattern to you, much better than what I just did in 2 minutes. We'll be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Hey, we're going to bookend the show with Jim in Palm Harbor. Jim, thanks for calling back. So in the next 2 minutes here, what didn't I answer that I can answer for you?
Okay, Steve, this is Mike from Ormond Beach.
Oh, Mike. Oh, sorry about that. Okay, sorry about that. Well, Mike, thanks for calling.
With the action of the Dow futures where we got up to 29,180, do you think we have negated the chance that we could retest the March lows?
No, I don't think that's the case.
Okay.
Yeah, I don't think that's the case, but still, we want to take things one step at a time out here. What the Dow equity future contract did yesterday was it confirmed a TD9 count pattern. So that's in the books here. And if price were to take out the bottom of its profile, the futures profile level, let me give that to you real quickly here. That's at, I got to get to it. That is at 27,997. If price closes below 27,997, then we'll see move back to its breakout level. The breakout level for the Dow would be 27,473. The Dow has really it has three key levels of support that it didn't have before when we were making that prognostication out there. And those are the TD9 breakout levels. So you've got one at 27,473, one at 26,197, and one at 24,266. It's the last one, Jim, 24,266. That price will need to close below to then give us that signal about the March lows out there. Does that help?
Yes, it does. Thanks for everything you do for us, Steve.
Hey, you bet. And sorry that I had you confused with Jim in Palm Harbor, but a nice way to end the show. You bet. So thanks for calling in, and have a great day, and thanks so much for waiting. Folks, stay tuned for 2 more great hours out here, and for the rest of the day. Again, the key levels to be watching inside the ES Mini 3471. You get a close above it. All today was a test of key support. Inside the NQ, it's 11,841. And again, inside that Dow equity future contract, 27,997. Have a terrific Thursday. We'll look forward to seeing you on Fantastic Friday. Take care.